Hey guys, welcome to the Sunday session. Apologies, it's not Friday. Had a big week. I was lucky enough to be asked to go and talk at a charity event on Friday afternoon. Took a lot of my time away. Friday morning I was out and kids, the weekends, the whole thing. Here I am getting it done on a Sunday evening. Apologies for that. All right, a couple of weeks ago I talked about a strategy which we use to help our clients to pay their home loan off quicker, to turn what their home loan becomes into a deductible loan as opposed to a non-deductible loan. Had a lot of great feedback. I'm going to send an email out to everybody this week who wants to find out more, because I do have a few people who watched the video said, hey, I do want to find out more, and we've got Zoom sessions with them coming up this week. So I do want to see as many people as we can to help you with this particular strategy. But anyway, in doing this, I've been researching home loans and, what's the average loan, what's the average repayment, all this sort of thing. So I figured I'd put it into a little wrap for you and send it out. So let us have a look. Home loan stats. Here we go. It's going to be short and sweet this week. Just a few stats for you. And all we're worried about is Queensland. The average new lending by states at July 2021, average new lending was $457,000. I want to do some more research. When I do, I'm going to share it. I want to find out what the average house price of purchase was. I want to find out what the average deposit was in terms of percentage. Was it 20% deposit? Was it less? Was it more? But this number here at 457 is the average new lending. In respect of median, as in the middle number of mortgage repayment on an existing home, in Queensland, we're at $2,012. New South Wales, as the high, 3.2. Victoria, 2.6. We went back here and you could see that the new lending amounts up there were also much higher for those two states. Their houses are more expensive. So in Queensland, we are at $2,012. We then talked about, or the research I was doing identified, I guess you could call it the sweet spot. How much of your loan is a percentage of your income? So what's your cash flow that comes in? If you're a husband and wife, as an example, and you each have $5,000 a month that you get paid after tax, that's $10,000. If your loan was at $2,800, then you're at the 28% mark. So these guys say here that a general rule of comfort is at 28%. So your mortgage should be 28% of your cash flow. So what's that? If that number there was 2012, 8 is 24, 7,000, about $7,000 income at 30%, 2,100 less 70, 140. So give or take a tiny bit over $7,000 income, and that average of 2012 gives you about that 28%, give or take. So do the numbers on yourself. Have a look at 1, what comes into the bank from your employment. What's the cash flow that comes in? 2, what's your loan repayment per month? Obviously use the same time frame. Divide the loan repayment by the income and that gives you the percentage. See where you are, because why is it important? The research that I did suggested that if you are higher than 28%, you're more likely to face mortgage stress when things start to go against us. So higher interest rates, things like that. If they move away, or if they increase, it moves away from you, you are going to be the one that's first under pressure. So have a look at how your numbers stack up. And if you're above that 28%, send me an email, give me a call. We'll have a look at it. We'll look at your repayments and see how long it might take for you to get down to that comfortable level. And we'll do what we can to help. So guys, that's it. The Friday wrap, the Sunday session, whatever it is this week. Hope you're having a good one. I'll do my best to get us back to a Friday next week. All right, guys. Happy weekend. Talk soon.